Happy Tuesday and welcome to the Tech Stocks Daily Podcast. Today we're diving deep into the sizzling saga of AppLovin, navigating their storm of legal woes with class action allure. Will they emerge victorious or sink deeper into the plot? Meanwhile, Apple's stock stats might have given some sticker shock, but with a rumored iOS revamp on the horizon, could their sleek future seduce investors all over again? Over at Eaton, they're defying the market's gravity while strategically snapping up fiber bond for that smart power edge. And as Verizon reevaluates its promotional playbook, its stock simmers amidst growth concerns, yet intrigues with its tempting dividend yield. Get comfy, because this episode is packed with dramas worthy of the NASDAQ stage. Buckle up, and let's decode today's tech stocks together. Oh boy, folks, grab your popcorn because we've got a hot one sizzling in the world of tech stocks today. None other than our star of the moment, AppLovin Corporation. If you didn't know AppLovin before, you're about to know them quite well after today's whirlwind of news. Let's dive into what's cooking with AppLovin on the NASDAQ. Picture this. AppLovin, a tech company known for its platform that aids advertisers in the wild west of digital marketing, is currently weathering a storm of legal battles and scrutiny like it's the Versace dress of tech stocks. Everyone's talking about it. And how the mighty have been shaken. Recently, AppLovin has been slammed with class action lawsuits faster than you can say Axon 2.0. Let's break it down. AppLovin was walking the red carpet of tech success with what they touted to be cutting-edge AI technology and their glamorous Axon 2.0 digital ad platform. This tech was hyped to revolutionize ad placements for mobile games, promising things sweeter than your grandma's apple pie. But alas, the lights dimmed on February 26, 2025, when deep-diving analysts threw a wrench into the works. Reports surfaced alleging that AppLovin was cooking the books on their ad performance metrics. Analysts accused them of some eyebrow-raising antics, exploiting Meta's advertising data, and using sneaky tactics to make ads click on themselves or download apps without user consent. It's like creating a blockbuster movie while cutting all the corners, but not in a Marvel-level CGI kind of way. And just like that, AppLovin's shares took a nosedive. They dropped over 12% faster than I can drop my phone mid-snap after seeing butterflies go by. With their stock not quite hitting the strong buy notes it was crooning, multiple law firms, including Robbins Geller, Faruqi and Gerard Sharp, came knocking on AppLovin's door, papers in hand. They are calling on investors who suffered major losses to step up as lead plaintiffs in these class action lawsuits. These shareholder warriors will put on their legal armor to take AppLovin to task on claims of misleading investors. To investors eyeing that AppLovin stock, here's what. According to Zacks analysis, despite the storm, AppLovin is expected to post quite the sunny earnings growth. If they can weather this tempest, some analysts believe sunshine and rainbows could bloom once again in their financial future. The stock, though like a spicy dish, best when handled with caution, is somehow still bringing in enough interest for a ranking of number one from some perspectives. And there you have it. AppLovin has found itself at quite the crossroads. Either it'll recover with that star-studded comeback or dig deeper into its legal drama script. Who knew ad tech could be so spicy? Stay tuned as we keep our eyes peeled on whether AppLovin walks off the NASDAQ stage as a soap opera or a redemption story. Hold on to your Apple Watches, because Apple's been buzzing around the tech scene with news that's worth biting into. First off, Apple's been the star of an intricate dance, tangoing with analysts and investors. An insightful piece of research took a good hard look at Apple and its competition in the technology hardware, storage, and peripherals sector. Now, while dancing through the numbers, we found that Apple stock is giving everyone a little sticker shock. Its price to earnings, price to book, and price to sales ratios shimmer quite above the industry average, hinting that Apple might be the fancy gold-plated fruit in the tech market basket. However, the company flexes its muscles in profitability, boasting a return on equity that's jaw-dropping, like seeing a pig fly. Despite boasting commendable profitability stats and strong cash flow generation, our Cupertino pals reported a below-the-industry revenue growth rate, poking a possible hole in their sales momentum. Yet their moderate debt-to-equity ratio paints a seemingly balanced financial canvas, suggesting Apple isn't quite burning the midnight oil on debts. So, how does this fair play out with their competitors? While Apple's a bit of a Wall Street darling trading at a premium, they still keep their profitability game tighter than a hipster's man bun. Meanwhile, another captivating narrative revolves around the future of iOS. Rumor has it that Apple's gearing up for a smooth touch-up with iOS 19. This anticipated software shift is expected to be the most dramatic since the windswept changes of iOS 7. Imagine your iPhone suddenly joining a sleek secret society of uniform design across the Apple ecosystem. We're talking about an aesthetic aligned with the Vision Pro's Vision OS interface, promising a cohesive, visionary experience across all Apple devices. While these changes might sound like just fancy new coat of digital paint, especially after seeing iPhone sales trip a bit over recently, Apple aims to dazzle users anew. So mark your calendars for the Worldwide Developers Conference in June, when Apple might just pull the curtain back on this transformative iOS facelift. Oh, and before we forget, whereas they've been topping revenue and EPS expectations more consistently than a caffeinated sommelier guessing wine brands, Apple's recent minus 0.1% share slippage has caught some investor attention. Hinting at a performance in alignment with the broader market, Apple currently fields a Zax 3, which translates to hold if you speak analyst. In summary, Apple's sticking on everyone's radars not just for its numbers game, but for gearing up to potentially wow us with a future-forward interface lift, all while navigating sector dynamics and investor scrutiny with its patented flair. Today, Eaton Corporation is in the tech news spotlight for a couple of compelling reasons. First, let's dive into the market performance side of things. Eaton, a dominant force in intelligent power management, has managed to rise above the market's downward drift. Their stock closed at an impressive $282.31, up 1.69% from the previous day. Meanwhile, other major indices like the S&P 500, the Dow, and the NASDAQ suffered losses. This resilience in the face of market adversity certainly deserves a tip of the hat, and part of the applause goes to Eaton's attractive earnings projections. Now, why should investors be paying close attention to Eaton in terms of earnings potential? Well, Eaton's projected earnings per share are anticipated at $2.70, which marks a sizable 12.5% increase from the previous year. And if you're a numbers nerd like me, you're undoubtedly captivated by those statistics. The company's revenues are also projected to rise, with an estimation of $6.26 billion for the upcoming quarter, up 5.34% from before. For the entire year, the expectations are sunny too, with earnings anticipated at 12.3 per share and revenues set to climb to $26.74 billion. Now let's bring some zing into the picture with the second reason Eaton is buzzy today. The company announced a big acquisition, agreeing to snap up Fibrebond Corporation for a cool $1.4 billion. What's intriguing about Fibrebond? Based out of Louisiana, this company is adept at engineering modular power enclosures tailored to data centers and industrial markets. And with data centers blooming everywhere like it's the new tulip mania of the tech world, this acquisition smells like a smart move. Eaton anticipates Fibrebond's revenues to hit around $378 million by February 28th next year. The acquisition, expected to close in the third quarter of 2025, should bring in $110 million in adjusted EBITDA the same year, being effectively EPS neutral. In simpler terms, it's like Eaton's put a dashboard spoiler on your stock car without messing up the weight balance. Adding to the positivity, Eaton will give their shareholders a bonus with an increased quarterly dividend of $1 per share, hopping up 11% from the previous quarter. The mix of positive market performance data and a strategic acquisition has undoubtedly turned heads and put Eaton Corp on every investor's radar today. Overall, watch this space because Eaton's got the financial fruits, the business acumen, and the investments steering in the right direction, making them a hot topic in the tech and industrial space. It's a narrative that will unfold further as the quarters roll by, so keep those binoculars handy in your investing toolkit. Today, we've got the scoop on why Verizon is making waves in the news, and it's not for that ultra-fast 5G network. Instead, Verizon stock took a bit of a nosedive, dropping by 6.6%. If you're a shareholder or thinking about investing in the company, you're probably wondering what's going on. Let's unravel this telecom mystery together. The drama began at the Deutsche Bank Media, Internet, and Telecom Conference. Frank Bulbin, Verizon's chief revenue officer, painted a less than rosy picture for the company's short-term future. He indicated that subscriber growth might be a bit lackluster in the upcoming quarter. How come, you ask? Well, Verizon has dialed back on aggressive promotional campaigns, while their rivals are pulling out all the stops to snatch up new customers. It's like hopping into a boxing ring with one hand tied behind your back. In business, competition can be as fierce as a video game boss level, and this is one telecom battle that's causing Verizon stock to feel the heat. The once relentless competitor is now more tame, primarily because they shifted their focus from flashy promos to concentrating on pricing actions and managing churn. That's basically fancy talk for reducing the number of subscribers jumping ship. Despite these current challenges, Verizon remains optimistic in its outlook for 2025, predicting they'll surpass previous benchmarks in net postpaid wireless subscriber additions. Now here's a little nugget for the savvy investor crowd. Even with today's stock slide, Verizon's not all doom and gloom. They're boasting a healthy dividend yield of 6.2%. So, if you're looking for long-term income, it's a carrot worth considering. Although, as always, investment comes with its risks and rewards. At today's close, Verizon stock was hanging tight at 43.42 cents, underscoring some wary investor sentiment around the short-term subscriber outlook. But with great market challenges also come debates about opportunities, especially with such a decent dividend yield hanging in the balance. Okay, tech aficionados, I've got a question for you. Do you think Verizon's strategy to pull back on promotions will pay off in the long term, or are they giving their competition a chance to snatch away market share? Are you worried or excited about investing in Big VZ right now? Hit that comment section below, let's kick off a discussion. I want to hear from you, whether you're bullish, bearish, or somewhere in between. All right, folks, let's hone in on the spicy saga of AppLovin. With all the drama unfolding faster than a tech enthusiast's unboxing video, my personal take lands in the hold territory for this stock. Let's analyze why. First up, the turbulence. AppLovin is starring in a legal thriller containing accusations of deceptive ad tactics, and this isn't a simple story arc. We've got analysts whispering about spiked metrics and some shady ad practices that have left investors gasping harder than someone watching a spoiler for their favorite show. These class action lawsuits could morph into a painstakingly lengthy courtroom drama that might drag on AppLovin's morale and finances. That said, not all scenes in this play are gloom and doom. According to the deep minds at Zacks, there's an optimistic earnings growth projection, signaling potential waves of sunshine post-storm. Wall Street tends to appreciate a redemption story. Lawyers sort out the rumble, AppLovin optimizes their ethics on board, and perhaps we see the company shine bright like a tech star again. But remember, turbulent winds could topple this boat on either side. It's all about balancing risk against those glittering future returns. As much as my instincts whisper hold, reminding us to stay vigilant there, I'd also urge all you savvy investors out there to grab your magnifying glass and do your own homework. Investment decisions shouldn't rest solely on another's advisories, no matter how engaging or tech-trendy those narrations might be. Dive into further numbers, scout the horizon for updates, and weigh out the possibilities. That's where the real smart moves lie. So tighten those investing goggles and keep a cautious watch on how this AppLovin episode unfolds. In a nutshell, today's market made its presence felt with dramatic rises, shocking falls, and some enticing side stories. AppLovin is caught in a whirlwind with legal battles reshaping its stock until redemption or further trouble emerges. Meanwhile, Apple is dazzling investors with near hallucinogenic PE ratios, all set to wow with a rumorous iOS revolution. Elsewhere, Eaton held its ground, showcasing steady financial climbs, coupled with a big leap into future forward acquisitions. Verizon, on the other hand, faced challenges in growth forecasts, sending their stock on a slipslide. But don't count them out just yet, with that solid dividend yield lingering like catchy elevator music. Remember, every day here is a tech tale waiting to unfold, stuffed with enough action and intrigue to fill its own blockbuster. If you enjoyed this dive into the vibrant world of tech stocks, go ahead and sprinkle some love by liking, subscribing to our channel, and sharing this video with fellow tech aficionados. And don't forget to swing back tomorrow where we'll bring you another episode dishing out all the hottest and most important tech news.